All right, welcome everybody to the next installment of Mrs. Royce's accounting lecture series. And what we're going to be talking about this lecture is Chapter 3 and journalizing. All right, let's get started. Okay, so let's get started. What is a general journal? Well, a general journal looks like this. And what it is, it's a form that accountants use to record transactions in chronological order. Now, chronological is a Greek term, and it means in order of time. So the accountants use it to put everything in date order. Now, when we're doing journal entries, there are 4 steps that we must follow each time that you journalize a journal entry, which means you are putting a business transaction in a journal. That's just too messy for me. So let's talk about the 4 steps. The first step is date. Remember chronological order? That's the first step. Then we must write the title of the account to be debited and then write the amount. So let's do this. Let's actually look at the general journal while we're doing this. I think that's a good idea. So if we're looking at the general journal, and this is the document that's used, and because of the GAAP, the General Accepted Accounting Principles, and consistency and consistent accounting, we know that we have to do things, and everybody's doing things the same way. So the first thing that you have to do for the general journal is put in your date. First thing. Then you write the account title under the account title column, and we'll just pretend it's cash. And then you write the amount. So let's say you're getting in $1,000. And then you indent, okay, the credited one. And let's say we're paying for advertising. See how it's indented just a little bit? You need that for the view of it, and then that's the credit amount. And then you have to put in that source document number, which goes right here. So it's always date, write out the account title. We'll just say this is September 25th. Should have done that first. Cash, advertising expense, not that you can read it, and the document number. You will do this every single time that you're putting a transaction into a general journal. These steps have to be followed. Okay, so just so we're clear on the steps, the first thing that you do is what? You write down yes, you're right, the date. Then you look at your business transaction, you look at what accounts are affected. Debits are always written first. So if you need to do a T account to figure that out, do it. So then you put your debited account title and you write it here. Then the next step is to put in your debit. If you want to, you can put your document number in here so that you're doing a very linear checklist. Your date, your first account title, the document number because it always goes on the debit line, then your debit, then you, remember, indent your couple spaces, then you write your account title for the account that's going to be credited, and then write your credited amount. We've got this. We've got this. Okay, let's move on. Okay, I did want to review again about what source documents are. I'm going to talk about them. We're going to be tested on them. I think it's that it's important that we understand that as accountants, we don't get these written out words, paid cash for supplies. We don't. We get documents, source documents, receipts, memorandums, check stubs that tell us what happened, and we have to create that. So I want to look at the first one. That's why the source document number is put on the journal. That way, if anybody has a question, they can refer to that source document and look at the original document. So if you look at this document from Delgado Services, if you look at what it is, it's a check. Pay to the order of, which means it's a check. It is signed by our owner of the company, Michael Delgado. We have paid for what? You got it, supplies, on January 2nd, and the check number is there for 1. So if we were doing this transaction, our source document number would be C1. Perfect. Now look at the next, let's look at the next source document, a memorandum. Now this one's kind of interesting because if you look at it or know what a memo is, a memo or a memorandum is, it's in-house communication within the business. That's what in-house means. So what's happened is someone has let the accountant know that they bought supplies from Canyon for $220 on this date, which means they took the cash or a check or whatever, but I'm assuming a memorandum. I'm not sure. They're just letting the accountant know. So what we do is we look at that, and then our number and source document abbreviation would be M for memorandum, and you find the number 1, and there's the 1. The next source document we're going to look at is this one, and I'm going to make it a little bigger, and it is a, can you see what it is? Yes, it's a receipt. Okay, now what's interesting is I want you to look at this. It's a receipt for what? It's a receipt to Michael Delgado for his investment. So the owner got a receipt from the company that shows that he invested $2,000 in the company. So the source document would be R for receipt. Yep, you got it. Receipt number 1, R1. Now let's look at the next one. If we don't draw a line on it and actually move it, if we look at this one and look at it carefully, you can see that it's Delgado Web Services, which is our company, and it looks like it says sold to, so we must have sold services. Oh, here it is, website design. So we sold the services to him. So this is a sales invoice. Sales invoice, sales, the abbreviation for that would be S, and it's a number 1 too, number 1. Now we've all seen what this document is that's hiding under here, this little one, and I don't know why it's not moving for me. There we go. And this is a calculator tape or a receipt tape. But if you're going to do something like this, see how it says T10? So it would be tape number 10, and we'll talk more about that. So now what we're going to go over is, I know that we have done on your own in the book, and you've done it on your own, and we're going over it in class. But this video is going to deal with the work together. And the work together starts for 3-1 on page 64. So if you need to turn to page 64 in your workbook, go ahead and then find the page in your student workbook. Okay, so you have your book open to the proper page, page 64, and you have your workbook or a page out of your student workbook, and it is page 39. And remember, we are doing the work together transactions, so let's get started. We are going to read and break down the transaction just like we've been doing before. You're going to look and notice that on April 1st, received cash. That's the first account affected. From the owner as an investment. Investment is the capital account, remember? Of course you do. And then we look for the amount of $2,800. And then here's our document number. So we have given this person, since it's an R, we've given this owner a receipt. So now let's put this in the journal. The first thing we do is the date, yes. And you write the date. Now, do you always write April every single time after? No, you're right. You only write it on the first line of the first page of the journal. And then you put in your debited amount and the account title. So we received in cash. Our document number is the next step, receipt number 1. For how much? $2,800. Perfect. Now we look at the next step. The next account affected was capital. We indent a little bit that way for capital, owner capital, and then that is a credit for $2,800. Do we balance? Do we have a debit and a credit? Yes, we do. Now, let's look at it this way. Let's look at the accounting equation. What is the accounting equation? Yep, assets equals liability plus owner's equity. So, is cash an asset, liability, or owner's equity? Right. So we increased our assets, and capital is owner equity. We increased our owner's equity. Perfect. Let's do the next one. Okay, now we're going to do the second transaction. So we are looking at the date of April 2nd. We paid cash for what? You're right, supplies. So we look at what is coming in. We have assets coming in, so we have supplies coming in. Supplies for $415. Okay, we must have paid by check, C1, because the cash went out, and so that will be the credit of $415. Now we're going to see the benefit of using a general journal page to journal more than one transaction at a time. We would have done it with, and we talked about this in class, T accounts for everything, there would be T accounts everywhere, and I think that would be very confusing. And I think Pacioli, the person who invented accounting, agreed. So this is what we do. So now we're going to do 3 transactions in a row on the same general journal page, and we've been practicing it. We still follow the same steps. What's the first step? You're right. You write the date. Then you analyze the transaction. What happened? You identify your accounts. So, if you use this technique of underlining and circling, it will help you. You bought supplies on account from Supply Mart. So, what accounts are affected? Supplies and your accounts payable, yes? So, what's coming into the business? Yes, supplies. We're getting a memorandum, which is a note within the business. The debit amount is $600. Now to record an on account, something that we owe out is a liability. We're going to indent that. Accounts payable to. Supply Mart. Do we always have to write the name of the person we owe the money to? I hope you know the answer to that question. It might be on a Kahoot. And then we write the amount that we owe. Okay? Debit, what's coming into the business is an asset. Does that equal the credits, which is the liability? Yes, it does. Do you write this on the journal? No. Am I doing this now for our own peace of mind? Yes. Now what we do is we look at the next transaction. The next transaction, paid. We paid what? Cash. What did we buy? Insurance for $500. So, since this is the second transaction on the journal page, we do not have to write April. We do not skip a line. We put 7. So, what's coming in? What did we buy? Prepaid. Insurance. How much? Exactly. $500. Oh, what did I forget? Yes. The document. How did we pay? It says C2. What source document is that? Check. Perfect. Okay, now we do the next part of the transaction. What other account was affected? Cash. Since that is an account that is to be credited, we indent it a little bit. How much cash went out? $500. Perfect. Now we look at the next account. And this is on April 9th. Again, we paid cash. Now we paid cash on account to Supply Mart for $300. So I'm going to give you couple seconds to do that. And then I will write it. And I want you to say what I'm going to say in your head or out loud. I talk to myself. Okay, that's the way it should look. We are reducing the amount of money that we owe Supply Mart by $300. Okay, so if you think about that and you think about the normal balance of the accounts payable piece of Supply Mart, okay, we had charged $600. Remember, the normal balance on a liability is a credit. Since we paid cash on that $300, now the balance that we owe, if the owner comes to us and asks us, is how much? Yep, you got it, $300. Perfect. So now we have moved on to page 75 in the textbook. These are transactions from Work Together 3.3. So now we are going to put these in the journal. We're going to analyze them and put them in the journal. So the first thing that we do is we look for the date, which is April 12th. Now because this is still on the same page of the journal, do I write April? No. So we put 12. We're still on page 1. All right, now we're looking at this. It says paid. Okay, so we know that that's going out. The 2 accounts that are affected are cash. Oh, and we're paying our rent. Okay, what would rent be? Yes, you're right. It is an expense. A small cost of doing business used up in a short period of time. It is a bill that comes in that we pay. Okay? So what we're doing is we are paying our rent on the 12th. So the account to be debited, the thing that came in, is the bill. So we title it rent expense. Why do you think we need to be so specific? You're exactly right. When the owner comes to you and says, how much have I paid for rent already this year? You're going to be able to answer the question. So, rent expense, the normal balance on an expense account, remember? The normal balance is a debit. So, rent expense, $650. Now, how did we pay it? The second account affected was cash. You're right, for the $650. Perfect. Now what we're going to do is we're going to move on to the next one. And I want you to look at it really quick. Why can't I write right now? Now we're looking at the 13th. This time we received cash. What did we receive cash from? Sales. All right, we made some money. Oh my goodness, $2,500. Okay, so the first thing we do is, yep, you got it. We write the date. Now, the in, what we received in, the dit is the cash. T13 must have been a cash sale from a register tape. Okay, and how much money was that? $2,500. Great. Now, what is the credit part of the transaction? Sales in the amount of $2,500. Again, what is the normal balance of an asset and the normal balance of sales? We did it. Okay, let's look at the next transaction. The next transaction was on the 14th. We sold services on account, so we made more sales, that's good, to this person. So how do we, when we extend credit, what is the account that's debited? Yes, you got it. Accounts receivable, because we're going to get it in. And we write their name so we know that they are the people that owe us the money. And they owe us, according to sales invoice number 1, they owe us $480. Now, what account is credited? Sales. For the $480. See? You guys got this. Alright, let's do one more. 19th. What happened? We paid cash for the electric bill. Okay? $220. We must have paid a check at C5. So, electric bill. Electric, phone, water, those are called utilities. And from now on, we will lump them all together. And if I could spell, it would be awesome. We are going to call it a utilities expense. Check number 5, $220. How did we pay it? We paid it with cash. Cash went out. $220. It looks like if we add all these up, our debits and our credits balance. All right, now what I want you to do is finish the rest of work together, and then if you have questions, come and see me. See you next class.